Investors shake off tariff fears and buy the dip, with investors buying $43.4 billion of stocks last week. This week, BYD and Tesla battle it out. We cover what you need to know. And gold takes a breather from its record all-time high, but there's cause for it to push on up. Welcome to the Daily. My name is Jessica Amir, a market strategist here with me. It's great to have your company this Monday, the 24th of March. Let's get to it. Well, tech stocks, consumer discretionary and consumer services are all charging up. We saw that on Friday with stocks like Tesla, Ultra Beauty, Airbnb, Meta, Netflix, Warner Brothers, Norwegian Cruise Lines, all leading the gains. Now, this basically suggests that investors aren't really overly concerned with tariffs that could trigger a recession. So concerns are there that we probably could not head into a recession. Meanwhile, we are seeing investors sensibly protect their portfolios ahead of this week's release of that key US inflation data. It's called PCE, and that's what the Fed watches when it comes to inflation. Now, if we see this report show that inflation is rising, that's the concern and that's the thinking. This basically means the Federal Reserve may need to probably keep interest rates on hold. But we have seen investors buying into the US dollar, basically pushing it to a 3-day high. And that is why we've seen commodity prices push down, such as aluminium, copper, gold, and silver. But do remember that we are seeing, importantly, we are seeing the S&P 500 hold up off its lows, while we are seeing gold break out and hit new record all-time highs. But what we're basically suggesting is today that gold stocks could come under pressure. Here's a gold ETF that we are putting on screen for those who are tuned in on our podcast. We're just displaying the ETF GLD. That's one of the world's biggest gold ETFs. And it is up 15% this year. As we're saying, the narrative is that more upside is likely ahead for gold. That seems to be intact, but as a result of the higher US dollar, you're probably going to see some of those gains taken back. Basically what we call profit taking. And this basically sets the tone for what we might expect for the Aussie share market today. It's probably expected to come under pressure. Selling, profit taking expected to be perhaps rife in some key commodity stocks, but for many, this will present a buying opportunity. So there's lots of talk about the 25-year anniversary of the dot-com bubble. I just want to pause on this for a second. Now, the dot-com bubble 25 years ago basically saw trillions of dollars of investments be eroded to losses. But here is why the 2025 pullback is very different. Now, this year's weakness stems from concerns about earnings growth slowing because of tariffs. And today we are seeing tech giants financially stable, they're profitable, and they're growing profits. Very different to what we saw in the dot-com era. Dot-com, we saw lots of companies unprofitable. They were unprofitable startups as well. But that's why investors appear right now to be buying into stocks in droves, taking advantage of the pullback that we've been seeing. And that's why stocks are continuing to move up off their lows. And at the outset, we spoke about global stocks seeing record inflows last week. In fact, the $43.4 billion of inflows that went into global equities last week in buys, that was the largest ever inflows recorded this year. This basically reflects the narrative that the long-term bull market seems to be intact, and there's indeed bullish sentiment still around. Let's change pace to something else that we're watching this week, and that is the battle with BYD and Tesla. It's probably going to intensify this week, and investors might be questioning if Tesla can maintain that 15% gain up off its lows that we've seen Tesla carve out of late. So what is happening with BYD and Tesla this week? Well, BYD shares are continuing to soar to record all-time high territory, and that is probably going to continue this week, particularly because China's biggest electric vehicle maker, and of course, it's one of Australia's most preferred EVs. Last week, they officially launched the world's fastest charging EV. You can basically charge one of their EVs in 5 minutes and it'll travel for 400 kilometers. So that's history-making stuff. Now, Elon Musk might be pretty hot under the collar this week because BYD this week is expected to report $100 billion in US dollars, that is, in revenue for the first time in history. So it's expected that BYD will clock 100 bill in revenue when they report their 2024 numbers this week. That means that BYD will surpass Tesla's sales for the first time since 2018. So that is something to watch. So keep your eye on BYD and Tesla. Lastly, what else to watch? Well, we are keeping a close watch on the Australian government and how they're going to plan to defend the nation's trade balance, particularly in the wake of the US putting tariffs on steel and aluminium. While more tariffs could be coming for Australia, we are expecting that to be outlined on D-Day. Trump is calling it Liberation Day, April 2. Nevertheless, tomorrow with the Aussie budget, we're expecting to see some form of retaliation as to how Australia really plans to defend their position. And that's probably going to be a key election issue that you might want to keep on your radar, particularly with those aluminium and steel companies that you maybe have positions in. And that's what to consider for the daily. My name is Jessica Ramia, market strategist with Moomoo. For more information, head to Moomoo's platform and stay tuned to our podcast.